Q4FY25 earnings conference call hosted by DAM Capital Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Agarwal from DAM Capital Advisors. Thank you, and over to you, sir.
Thank you, Yusuf. Good afternoon, everyone, and a very warm welcome to Ipca Laboratories Limited Q4FY25 earnings call hosted by DAM Capital Advisors Limited. On the call today, representing Ipca management, we've got Mr. A.K. Jain, Managing Director, and Mr. Harish Kamath, Corporate Counsel and Company Secretary. I will hand over the call to Mr. Jain to make the opening comments, and we will open the floor for questions. Mr. Jain, please go ahead, sir.
Thanks, Nitin, and DAM Capital Advisors for organizing this call, and welcome to all participants. Today's hearing call and discussions and answer given may include some forward-looking statement based on our current business expectations. This must be viewed in conjunction with risk that pharmaceutical business faces. Our actual financial performance may differ from what is perceived or projected. You may use your own judgment on information given during the call. Our domestic business for Q4 has delivered a growth of around 11%, and overall for the whole of the year it has delivered around 12% business growth. Met March 25, Ipca is ranked as the 16th as per IQVIA and is fastest growing company among the top 20 players. Ipca continued to improve its market share. In last quarter, Q4 also, we have improved our market share by around 9 basis points to almost around 2.07% from 1.8% in March 24. Both on acute and chronic segments, we have delivered better growth compared to the market. As per IQVIA, overall market growth was around 8%. Ipca delivered a growth of around 13.2%. On acute segment, the market growth was 6.9%. Ipca delivered around 10.9%. On chronic, market growth was around 9.8%. Our growth is tracked by IQVIA as 17.9% overall. Compared to industry, our contribution of chronic segment is lower, but we are fast catching up. The market gets around 61% from acute, and in case of chronic it is 39%. For Ipca it's around 66% for acute and 34% for chronic. Market is not identifying rheumatoid arthritis as a chronic segment, but this is more chronic than any other segment because it's all disease-modifying agents which are to be taken for life. But if you include that, then our chronic segment contribution would be much higher. You will recall that post-COVID we have increased our coverage to the metro cities, and that has helped the company to get better share from metro markets. For market, let's say from 2022 to 2025, the chronic 30 metro cities are giving a contribution of around, in 2022 it was around 32.66%, which had moved to around 34.19% in 25. So there is an increase of metro cities contribution to the market has gone up by 1.53%. But as far as Ipca is concerned, our market share in 22 was around 32.65% for all 30 metro cities. It has now moved to around 37.52%. So there is a significant increase of almost around 4.67% contribution which is coming from metro. So that has helped by our overall the metro city coverage, which post-COVID we have changed that, and that has given us and that's one of the reasons that we are also growing faster in the market. Our export formulation business, the branded formulation business has delivered a growth of around 10% for FY25, from 527 crore to around 582 crores. For Q4, branded formulation business has delivered a growth of around 3%. Generic business delivered a growth of around 15% from 312 crore to around 357 crore for the quarter. FY25. And for full financial year, the business has grown to around 1,336 crores from 1,248 crores. So there is a growth of around 7% in overall branded business, which includes the institutional business. The lower growth for the financial year in generic business is mainly due to decline in business in South Africa from 113 crore to around 39 crore, a decline of almost around 74%. That's mainly on account of loss of certain tenders in South African market. Our API business has delivered a growth of 2% for the quarter for the Q4/25, and for the whole of the financial year, there is just a 1% growth in the API business. So we have in the current year improved our margins. Overall, if you look at standalone Q4 EBITDA margins is at around 21.19%, as against 18.5% in Q4/24. There is an improvement of almost around 2.66%, and the absolute term, your EBITDA margin has gone up from 279 crore to around 347 crore, an increase of almost around 24%. Standalone FY25 EBITDA margins is at around 22.66%, as against 19.29% for FY24. There is an improvement of almost around 3.37%. And overall EBITDA margins has gone up from 1,189 crore to around 1,533 crore, and there is a overall increase of almost around 27%. Consolidated EBITDA margins for Q4 is at around 18.24% as against 14.98% in Q4 FY24. There is again improvement of almost around 3.26%. And the overall EBITDA has gone from 305 crore to 410 crore. There is an increase of almost around 35%. Consolidated EBITDA margin for FY25 is at around 18.94% as against 16.72% in FY24, an improvement of around 2.22%. And overall EBITDA margins has gone up from 1,288 crore to 1,693 crore. There is an increase of almost around 31%. And we have delivered better margins as against the guidelines given for the year. Our overall guidance for the year was around 18% kind of consolidated EBITDA margin. As against that, we have delivered around 18.94% overall. Our subsidiary Unichem has delivered a consolidated growth of around 18% from 1,785 crore to around 2,211 crore overall business, and improvement in EBITDA margins from 87 crore to almost around 265 crore, and in percentage term from 4.87% to around 12.55%. And if you look at last 2 quarters EBITDA margin, it was in the range of around 14 to 16%. With overall improvement in business as well as improvement in operational efficiencies, we could deliver the overall better EBITDA margins for Unichem. The guidance for next financial year, current financial year, is that we will continue to grow around 8 to 10% in the FY25. And we expect our EBITDA margins to further improve by around 1% consolidated basis from 18.94% to around 20% for the current financial year. Having given the broad numbers, now I will request participants to ask for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Surya Narayan Patra from Phillip Capital. Please go ahead.
Yeah, thank you. Thanks for the opportunity, sir. So my first question about the US business potential. See, and US business that we would have done. So now since we have integrated Unichem fully, So what is the US revenue that we would have reported in the consolidated number for that market? And also, if you can give some sense now, since it is integrated, part of our US business is getting routed through them also. So, in terms of the new product introductions and the incremental business that you would have added. So, if you can give some sense that, okay, what is the incremental US sales that we have added this year because of our own product, and what is the overall US number that we have seen for the group as a whole, and what is our outlook that we would be having for FY26?
As far as Ipca is concerned, US has not made any significant overall contribution to the overall generic business. I think we have standalone basis. I think we have shipped goods worth around 65 crore. For most of the shipment has happened in the third and fourth quarters. Very small shipment was happened in the earlier quarter. So overall, and as a transit time and all put together, I think on consolidated basis, it is just contributing around 22 or 23 crore kind of business. So it has not contributed a significant business in the current financial year. We have just, I think, in last financial year, we have shipped around 3 products, and 4th product was shipped in the month of March. And I think in current year, we will be shipping almost around 7 more products. So I think overall, the current year, I think overall, US business should contribute around 100 crore for us in the current financial year. That is what is our internal budgets are there for US business for final sales in US market. Yeah. And as far as Unichem is concerned, Unichem has achieved a US business of around 1,317 crore as against 1,077 crore in previous financial year. So they have delivered overall growth of around 22%. But this also includes the business of Bayshore, which was earlier grouped with Ipca, and now it is grouped with Unichem now. So around 22% growth they have delivered, and overall Unichem has delivered for whole of the financial year a growth of almost around 19% in the overall turnover, and I think including other income, it's around 18% overall is the overall growth Unichem has delivered.
Sure, sir. Sir, just an extended point on the US business itself. So now, since Unichem is integrated, our R&D also should have seen some kind of integration, because at the time of acquisition itself that you have been talking about, rationalizing the consolidated R&D spend by so what is the kind of because there is no greater filing momentum that we are witnessing. So going ahead, what would be your spend for the group as a whole, or for, let's say, Ipca on a consolidated level basis, and what R&D priorities that you would be having going ahead in terms of ANDAs, in terms of APIs?
I think Ipca has already started filing. I think first filing has been done in the month of April in current year. And I think in current year we should file almost around 6 to 7 products. And overall we have capacity to develop almost around 20 products, so which globally for India, ROW, and all these other developed markets. So overall that's the kind of development will happen. As far as R&D expenditures are concerned, we are at almost around currently around 3.25% as far as Ipca is concerned, and the standalone I am talking, and this also includes the biotech, and this expenditure is likely to be around 4% in the current financial year. And as far as Unichem is concerned, their business development, overall development cycle, because initially their focus was shifted towards overall, let's say, market extensions and filings in the various markets of their existing products. So that journey is going on. And I think they will also be filing around 3 to 4 products in current year. So what we have done is whatever duplications was there, that has been avoided. But rest Unichem team is independently doing their work, and Ipca team is so nobody from Ipca, let's say, except the senior management is, let's say, our operating management of R&D of Ipca is not supervising the Unichem R&D. Unichem R&D is completely independent.
Okay. Just last one question from my side. So in fact, the export growth generally is when, or export was considered to be the growth engine for Ipca some time back. But in the recent period, that obviously we have seen they have faced challenges because of, let's say, the impurity issue in a couple of products and initiated by the Europe, and this year FY25 numbers are also kind of similarly weak. So like, how should one really think about it? And you also mentioned about a couple of contract getting lost in the South African market. Is it because of the cost issue, or so? Could you give some sense about your overall export growth plans, because that used to be the kind of a real driver for us.
Let's say overall export, the formulation business will continue to have a growth of around 10 to 11% for us. And we are now working on to say expediting our filing. So I think R&D is gearing up, and already, as I talked, that we should be able to do almost around development of around 20 products in a year. So that is what is currently happening, and I think US market and Europe market and all, now number of filings are all increasing now.
Okay, but so the guidance, the growth guidance that you have mentioned, 10%, so that is in no way showcasing any kind of synergy benefit of acquisition or the cross-selling benefit or anything. It is a normalized growth, possibly we would have just maintained. So
Unichem's portfolio, I think, let's say filings have started happening, but approvals will take some more time. So till the time those approvals comes, we are not including them in our guidelines. So as and when those approvals will come, we will start adding those products to our basket. Yeah. So that is still taking some time.
Is it more about non-US markets, sir?
Yeah, it's a non-US market. Yeah.
Okay. Sure, sir. Thank you. Wish you all the best, sir.
Thank you.
Thank you. Next question is from the line of Damayanti Kedia from HSBC. Please proceed.
Hi, thank you for the opportunity. My question is again on export market. So if you can, talk a bit more about performance in key market like US, Australia, New Zealand, etc., as well as in some branded market. And for these markets specifically, the bigger one, like on an overall basis, you mentioned 10 to 11%, but if you can also talk like how should we look at growth in these bigger market in both generics and branded part.
As far as the branded formulation business is concerned, we have grown this year by around 10%. CS, which is the large branded promotional market, the growth is muted at around 2%. And for the current financial year, we are guiding a growth of around 10% from the CIS business. Apart from CIS market, all other markets have grown well in the branded generic business of ROW market. West Africa has grown by 34%. Latin America has grown by 17%. And Southeast Asia has grown by 24%. Only in case of Middle East Africa, there is a degrowth of about 21%. It is a small market contributing around 70 crores. As far as the generic business is concerned, Europe has grown by 12%. Europe has grown by 10%. And USA is a new market. Last year there was no sale. This year the sale is around 65 crore. Australia and New Zealand, there is some inventory rationalization, so there is a degrowth of around 11%. From 301 crore, the market has come down to around 268 crore. Canada, there is hardly any growth. 116 crore was last year. This year it is around 113 crore. And South Africa, Mr. Jain has already said because of loss of certain tender products, there is a degrowth of around 65%. So overall, generic business is flat. 981 crore was last year. This year also it is 981 crore. Whereas institutional business from 267 crore, we have grown to around 355 crore, a growth of around 33%. So including institutional business, overall generic business, there is a growth of 7%. So total export business, there is a growth of 8%. So 10% is promotional market, and generic market, including institutional business, 7%. So overall generic business, there is a formulation business, there is a growth of about 10%.
Okay. So just a question. CIS, like why we saw like 2% growth? What has happened there?
No, it is mainly because of this currency fluctuation, because dollar versus ruble rate.
Okay.
So it crossed 90. Now it has come down to 79. So we feel this year the growth will be better.
Okay, that's helpful. And then my second question is...
Even though there is a volume growth in the market, value growth is only 2% because of the currency fluctuation.
Okay, so volumes were healthy, but because of this currency fluctuation on a total basis.
Yeah. Yes.
Okay, that's helpful. My second question is if you can update on some of the newer projects, which Ipca was working on. So some new plants, etc., where work has been ongoing for last year or so. So if you can update on those.
4 of the new manufacturing greenfield plant will start trial production in the current financial year. That include monoclonal antibody facility, which is coming up at Pithampur, Madhya Pradesh. So one intermediate API manufacturing facility is coming at Wardha near Nagpur. One new formulation facility for domestic market is coming up at Devas. So these are the 3 manufacturing facilities that are coming up in India. And one more greenfield manufacturing facility is being set up by Ipca, which is our step-down subsidiary in North Carolina. So that facility will also start trial production in the current financial year. It will be injectable and oral liquids.
So all the plants, they will start...
trial production will start in the current financial year, right?
Okay. And then scale-up should be more visible in coming year, right? So this year maybe...
That is right. FY27 and 28 onwards, you will see some scale-up in the business.
Okay. And my last question is on Unichem. Although margins have moved up substantially, but when do we see it moving closer to the consolidated average? Because during, I guess, the deal, there was talk about cross market selling, etc. So I understand on the raw material, I'll say procurement part, a lot of synergies has been achieved. But what about other margin drivers for the Unichem portfolio?
Whatever guidance we gave at the time of acquisition of Unichem, many things are work in progress. Since it is a regulated business, everywhere there are issues relating to dossier, application, registration. All those things are going on. So benefit of all this integration, what we spoke at the time of acquisition, hopefully will start yielding some benefit from the current financial year onwards.
Okay, so 26 onward, we should be seeing some more...
Yes, it will start, you will start seeing the benefit.
See, we were talking around 300 kind of EBITDA margins after 2 full year of its operation. And I think we already achieved around 264 crores overall in Unichem. That is without, let's say, not a single API of Ipca is qualified as still in the Unichem because that's under the work in progress, and not a single product of Unichem has been approved in other markets. So all those synergies are yet to be, but still, let's say the margins will keep on improving.
Okay, sir. And as some of these factors start delivering, as you mentioned, maybe this year onwards, we should be seeing better pickup in the margins.
Yeah.
Okay. Thank you.
Thank you. Next question is from the line of Chintan Doshi, an individual investor. Please go ahead.
Yeah, hello sir, can you hear me?
Yes, yes.
Sir, I can see a lot of activities are going at the Pithampur facility that is belong to the Ipca Laboratories, right? So as you already mentioned,
that is APA facility.
Right. So can you give us a light, like are we it is a startup of just trial production is going to start, or how it is? Like it is going to contribute from this year onwards, or we are looking just the number will going to contribute next year onwards?
It will be from next financial year onwards. This year trial production will start, but scale up will happen only in the next financial year.
Okay. Thank you, sir.
Thank you. Next question is from the line of Shiva from Purnartha Investment Advisors. Please proceed.
Yeah. Hello. Am I audible?
Yes.
Yeah. Good afternoon. So my first question is with respect to the capex. We've spent somewhere around 775. If you could just throw some light on the breakup of where we've spent the amount, and for the next year, what will be the total capex of our company?
Apart from routine maintenance capex, which will be around 250-300 crore level, I told you 4 projects are currently under implementation, which will start trial production in the current financial year.
Okay, and the breakup of where we are spending money?
So around $20 million is for the injectable and oral liquid facility that is coming up at North Carolina, US. Around 250 crore for a formulation facility for domestic market coming up at Devas. Another 250 crore for a APA and intermediate facility coming up at Nagpur. Plus monoclonal antibody facility, another around 250 crores. These are the major capexes which will get capitalized in the current financial year, and all those facility will start trial production in this financial year, that is FY26.
Okay. So biosimilar one, you had something in Pithampur, that is the same one?
That is the same one which will start trial production in the current financial year.
Oh, okay. And you've given the overall guidance of 8 to 10 and EBITDA margin of 20%. How are the Unichem and the standalone breakup? Like, if you could just throw some light. I mean, at the standalone level, how do you look at the growth and the margin, and at Unichem level?
Unichem currently around 2,000 crore annual sales and around 14-15% EBITDA margin. So whatever guidance we gave at the time of acquisition of Unichem, they achieved that 1 year before our guidance. Hopefully, current year also they should improve their EBITDA margin by about 1% and about 8 to 10% growth in the top line.
Okay.
But whatever the synergy of our acquisition of Unichem, their products we are taking to the market where they are not present as of now. Australia, New Zealand, Europe, that is work in progress. That benefit will come perhaps a year after next year.
Okay.
So those years are getting filed, it will get registered, then we will slowly start marketing their products.
Understood. And as of now, the Bayshore is only 22 crores in Unichem's revenue in the 2,100 crores that they...
No, Bayshore is about 150 crore, you could say, top line. Unichem acquired that from 1st of October.
Okay, you said we had only 22 crores of sales in US.
That is Ipca.
No, that is Ipca. So we also post our facility clearance. We started marketing our generic formulations through Unichem in the US. So from our side, we
also use
Bayshore, I don't manufacture anything for Bayshore. Bayshore is acquiring products from other facilities, including from Bangladesh and all.
Oh, okay. Okay. And with respect to the standalone, we had something about in the institution with respect to the funding issues that US has cut down. How are we looking at that for the next year? What kind of institutional growth are you looking at?
There is no exact clarity in that. Having said this, we are hoping we should grow that institutional business in the current financial year also. That is FY26.
Oh, okay.
This year the growth is more because a year before our injectable line was undergoing some modernization and all. That is why the sales were less in FY24. That is why you feel current year, that is FY25, growth is higher in the institutional business. From that level also, we feel this year also we should grow that business maybe around 8 to 10%.
Okay. And how do you look at the API thing, prices-wise? Are there any stability that is coming, or how do you look at your API volume and the price?
The API business and pricing was at peak during COVID time. From that time onwards, there is a consistent downward trend in the API pricing. So even though we have improved our volume compared to what we sold in during COVID time, you don't see that in the value because of the prices continuously coming down. But now there is a stability. Slowly we feel it will start slightly improving from this level.
So going in the current the volume growth will be the top line growth because there will be stability in the prices?
That is correct, yes. So FY26 you will see volume growth as well as price growth when it comes to API business.
Right. And how are you looking at it after in the second half onwards? It will be a slightly higher growth, or you look?
We have seen some picking up in the market in the fourth quarter itself.
Mm-hmm. Okay. And the domestic one, consistently we've been gaining market share and we've done quite good in the domestic arena. So you feel that will be you will keep winning market share and improving?
So our guidance is in domestic. Next 3 to 4 years, we will beat market growth and we should grow 1.5x the market growth. That is what is our, historically we have done, and going forward 3-4 years, that is our guidance.
Oh, okay, great. Okay, thank you. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Kunal Randeria from Axis Capital. Please proceed.
Yeah, hello, good afternoon. So you have, I think, around 7,000 marketing reps in India. So which means the PCPM is just over 4 lakhs. So with your current portfolio, what do you think would be the optimum PCPM?
See, now the business is growing around 12%. If we don't add any PSR in the market, our per man productivity also increase by 12%. But having said that, every year we add in the normal circumstances 400 to 500 people just to take care of increase in the medical practitioners and all. So that trend will continue. So even though value-wise you don't see much per man productivity because of our nature of product, what we market, anti-malarial, where volumes are very high, value is very low. So that also has some impact on this per man productivity.
Sure, sir, but there's still scope to increase it, right, to get it to maybe 5.5 lakhs in 4 to 5 years?
So currently it is around 4 lakh and 4.3 lakhs. It should grow around 8%, maybe compounding next 3 to 4 years.
Sure. Okay, got it. So
the addition of around 400 to 500 people.
Got it. So that will continue for the next 2 years. Got it.
Yes.
So secondly, on the US business, now that you are kind of ramping up your filings and everything, do you think realistically the kind of filings you have in the next 3 to 4 years, this business could be a 400-500 crore business, excluding the Unichem, your own business?
That is Ipca product manufactured at Ipca India facilities, correct?
Yes, sir. Yes, sir.
So whatever figure you have given is possible. So 10 years back, we were doing about 240 crore with only around 8 products. So we just started. Some products have reached US. Another 5 to 6 products will get commercialized in the current financial year. Thereafter, there is a pipeline for new product commercialization year after year. And we have also ramped up now development of products for the US market.
Right, but just to clarify, your strategy has been to back it with your own APIs. So wherever you have the DMF filings, you use that DMF filing for that.
Most of the filings are backed by my own APIs.
Okay, sir. Okay. All right. Got it, sir. Thank you.
Thank you. Before we move to the next question, a reminder to the participants to ask a question. You may press star and 1. Next question is from the line of Dharmil Shah from Dalmus Capital Management. Please go ahead.
Thank you for the opportunity. I have more specific questions on Unichem. We see the fourth quarter results. Gross margin sharply declined from 64 in 3Q to 55%. Was there any one-off in these 2 quarters, or what was the reason for?
No, it is majorly because of the product mix change.
Okay. And any specific therapy that we tilted towards, or?
No, nothing like that. Depending on market situation, market demand, market growth, plus minuses will happen in the therapies. Some therapies, some products give better margin, some products give slightly lower margin. So majorly the impact is because of that. There is nothing one-off or anything in this.
In fact, fourth quarter, the contract manufacturing has gone up from 58 crore to 90. So there the margins are lower here. Because material cost is higher there. There is no marketing and other costs involved there.
Understood. And on the guidance, you gave 1 year guidance of about 10% revenue growth and 1% improvement in EBITDA margin. But once we assume the synergies come in next 2 to 3 years, geographical synergies or maybe API coming in from Ipca, what do you expect revenue growth and margins for Unichem 2 to 3 years from now?
See, ideally, our intention, the margin should go to around 18%, 18 to 20%. That is the maximum what we can achieve because they are into only generic business and API business. I am talking about Unichem.
Understood. And revenue growth over next 2 to 3 years?
Around 10 to 12%.
Understood.
Only silver line is they have a lot of capacity available to grow their business. So there is no need for any fresh investment in facility creation in the immediate future.
Understood. So what would be the capacity utilization right now as on date?
So their major formulation facility, Goa, just last year commenced commercial production. So there they can do lot of production. There is lot of capacity available there. So capacity is not a constraint for Unichem.
Understood. And lastly, are there any effects of US tariffs on pharma? A very broad question, but are you seeing any effects?
Whatever guidance we have given without considering what you spoke. So if that comes, there will be definitely a variation in whatever guidance we have given.
Understood. Yeah. Thank you so much.
Yeah, thank you.
Thank you. Next question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thank you for the opportunity. Couple of clarification. How much capex have we spent in total capex spent in FY25, and how much are you guiding for FY26? The total number.
Currently, it is around 400 crores.
So FY24 plus FY25 put together. FY25 plus FY26 put together, it will be around 1,000 crore.
1,000 crore. And how much of that we have already spent in 25?
Around 600 crore we have already spent.
So 400 crores more is expected to be in FY26.
That is correct, yeah.
Okay. And sir, in the API segment, what is the growth guidance for FY26?
Around 6-7%, Shmi, not beyond that.
6 to 7%. And last one clarification which I wanted. Earlier you mentioned that institutional business plus generic business will give a growth of around 7%. So in case of the generic business is going flat for FY26 also, then your institutional business growth will be around 24-25%.
No. FY26 we are projecting a growth of 10% in the generic business, including institutional business, both put together.
Okay, so your generic
the flat generic business was in the current financial year, excluding institutional business.
Got it. So your generic segment, excluding institutional business, will also grow around 8 to 10%, and your institutional will also grow in that range.
Around that line, yes.
Okay, sir. Thank you. That's it from my side.
Yeah, thank you.
Thank you. Next question is from the line of Tushar Manudhane from Motilal Oswal Financial Service. Please go ahead.
So thanks for the opportunity, sir. Just on this product filings from Ipca's side for US market, so the one which you referred for FY26, these are like what refilings of the already approved product for US market?
No, they are fresh development, fresh filing, Tushar.
Understood. So 6 to 7 new filings.
Everything got over in the last financial year.
Got it. And sir, any particular reason you would like to highlight where the business where products being shipped but still taking longer? Is the competition pressure so much that it's a little difficult to push our product after getting into this market after many years?
It is nothing like that. As and when the inquiry gets floated, we do participate, but already people are with somebody else in contract and all. So it will be a gradual progress as far as the US generic business is concerned. Having said this, whatever benefit we have, cost, other thing, own API, that remain today also.
Understood. And just lastly, how many, I missed that number, how many MRs to be added for FY26?
Around 400.
All right, sir. That's it. Thank you.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. Next question is from the line of Rahul Jivani from IIFL Securities Limited. Please go ahead.
Yeah, thanks sir for taking my question. Sir, this revenue guidance which you gave of 8 to 10% for FY26, isn't that a bit conservative number given that in the domestic business we are beating market growth by 300-400 basis points every year, and for the export businesses as well we have generally indicated about a 10-11% kind of a growth excluding the API business. So are we a bit conservative in terms of the overall revenue growth guidance for next year?
If you see our business segment and turnover, if API grows by 6-7% and all formulation business excluding India business grow by around 10% and India grows by around 12%, the overall growth will be 8 to 10% only.
Okay, sir. So this is including Unichem as well you are talking about?
Yeah. Even Unichem business also will grow around 8 to 10%. So overall company as a whole group level also we should grow around 8 to 10%.
Sure, sir. And sir, once these integration benefits of Unichem start playing out going into the next couple of years, then do you think that this growth of 8 to 10% would accelerate going forward? And with the
around that time the top line should grow around 12-13%.
Okay, sure, sir. And sir, on the US business, I missed the number for Ipca. So at one point you said 22 to 23 crore. And at some other point, you also indicated 65 crores. So what is the US sales done by us?
Yeah. In our standalone accounts, what we have billed to Unichem US is 65 crore. Okay. Whereas in the consolidated account, what actually got sold by Unichem US in the US market is that 23 crore.
Okay. So
So it is 25 crore. Yeah. So what we shipped is 65 crore. What they sold is 25 crore.
Okay, sure, sir. And sir, last question on Unichem. You indicated about 100 basis point margin expansion for Unichem going into next year. Now, would this margin expansion be on the full year margins of Unichem or the 14-16% margins which Unichem had in the second half of last year?
No, it is on the whole year we are talking.
Okay, sir. Thank you. That's it from me, sir.
Yeah, thank you.
Thank you. Participants, to ask a question, you may press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to the management for the closing comments.
Hopefully, we have answered all the questions. I don't think there is anything further to add. Thank you very much, all the participants. Thank you.
Thank you. On behalf of DAM Capital Advisors, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you. Bye.